The markets have just opened for the final day of trading before closing the books on a tumultuous 2018. The Dow Jones Industrial Average is up almost 250 points.
Now heading into the day, the Dow was down 6.7% for the year, on track for its worst annual performance in the last decade. Most of those losses just from the last month. Investors, of course, hoping to end the year on a brighter note. And David Nicholas, the president of Nicholas Wealth Management, is here to tell us whether those hopes are well-founded. Good to see you, David. Let's talk about this downturn. How should people understand it? I know why is the hardest question on Wall Street, and yet I ask why.
Yeah, that's the question everyone wants to know, right? But the economy is actually doing much better than the market makes it seem. I'll tell you, what we've seen, the volatility in the last few months, it really has everything to do with the Federal Reserve. October 3rd was the day that the markets peaked, but that was also the same day that the Federal Reserve chairman came out and said that we were a long way away from neutral from raising rates. That spooked the markets. So ever since October 3rd, rates are going up, right? And so the expectation was 3 interest rate hikes in 2019. The Feds are probably going to have to re-examine that to see, seeing how the market has responded. But it has everything to do with interest rates and the fear that the economy can't support rising rates.
So the Fed does seem to indicate, though, that it won't raise rates as much in 2019 as it did in 2018. Does that lend to some optimism that the markets will rebound in the new year?
It does. Yeah, I'm hoping most of the selling is behind us, but unfortunately, January isn't always the best month for the market. So some of the issues that we still haven't had a trade resolution with China. That's going to be a negative on the markets. We may see gridlock in Washington, and there's this idea that the Feds may raise rates. So those are some of the headwinds that are still facing us in 2019. I wish I could say 2019 is going to be a smooth year for investors. I think it's going to be a bumpy ride, but I ultimately think we end positive, because at the end of the day, it all comes down to earnings, and corporate earnings should still be positive in 2019.
Yeah, let's merge those two ideas, why rates matter and whether earnings can overcome the trouble with rates. We've had this unprecedented era of incredibly low interest rates for the last 10 years, and people have done what you do when money is cheap. They've borrowed, whether it's governments or big corporations or individuals. And so the question becomes, if the Fed does what they say they're going to do and raise rates, can Wall Street, since this is a Wall Street discussion, can they overcome that? And you're saying you think they can.
And by the way, I just want to point out that raising rates is what you're supposed to do when the economy is strong, isn't it?
Yep, both great questions. You're exactly right. Can Wall Street overcome it? They should be able to, but you have to understand, it's almost like we've been addicted to, like you said, a low interest rate environment. So it's more about psychology. The psychology is we've been used to this low interest rate environment, almost like a fantasy land of the low rates. We're having to get back to reality. And that's what the market is trying to process. It's like taking the patient off life support. We want the patient to survive on their own. We're just not sure if they can. I think the economy can, but the market is saying, look, I'd rather have these low interest rates, which help stimulate the market. And so that's really what the market is working through. But globally, from a debt standpoint, you mentioned global governments are holding more debt than they ever had. And so if we're looking to what's the next big issue facing economies, I think it's global debt. Not only just the U.S. debt, but if you look at Spain, Portugal, France, all of these nations' debts have increased dramatically over the last 10 years. The markets are going to have to unpack that. So it could mean a pretty eventful time for the markets as we go into another recession.
And David, is the government shutdown having an impact on the markets right now?
I think it is having a slight impact. Normally, a government shutdown can be pretty impactful to the market. The last government shutdown in 2016 that we had, markets were down almost 16%. So I don't think this drop is having to do because of the government shutdown. But if this lingers late into January, I think you'll start to see that effects play out in the market.
Okay, we noted your prediction, David Nicholas. Markets up in 2019. We thank you for going out on that limb. Good to see you.
Absolutely. Thanks for having me.